the economy turns, and precisely to answer those questions we have with us Aditi Nayar, the senior economist at ICRA. Aditi, good morning. Thanks a lot. Well, first up, we are getting the IIP number today. What's your bet? Will it be better than the July numbers? Will July be better than June numbers?
Lata, I think that we're going to see a small downtick as far as the IIP number for July is concerned compared to the 3.8 initial print that we have for June. As far as the leading indicators are concerned, it's a bit of a mixed picture. The core data, of course, has given us a very, very flat and a very disappointing number at just around 1%. At the other side, we have a base effect that is positive on the whole, but when we look at the disaggregated sectoral trends, it's giving a very mixed picture. So I expect that we're going to get a muddied disaggregated picture coming in for the month of July as well. We've also seen that as far as the merchandise exports are concerned, if we set aside oil exports, other exports are now contracting at a slower pace than what we've seen in the past. So that's a little bit of good news. All in all, I think that we're going to get a slight deceleration as far as the overall IIP growth number for July is concerned. But if that's the case, I'm not going to be terribly disappointed or concerned because I don't think that that's necessarily going to be a very good representation of what's happening in the broader economy.
Aditi, if you have to compare the high frequency data indicators with what we would see in IIP, how have we done in July and how are we doing in this month as well? In terms of auto sales, capital goods,
So in terms of the high frequency indicators, we're certainly getting a very mixed picture. There are some sectors that are doing quite well, particularly if we look at the auto data for July or even August, we're seeing fairly healthy numbers coming in for passenger vehicle and commercial vehicles production. Sales numbers are slightly more muted, but I think as far as the production side is concerned, the data has been quite good. A couple of things that are bringing down the core sector and the IIP in the last couple of months, and I suspect that these trends will continue going forward, is that particularly if we look at the coal sector data, we've had a growth of around 7% or so in coal output between January and June 2015. So that's been one of the fastest growing sectors. At the same time, thermal electricity generation has only grown by around 2.5%. And we've seen now that as far as Coal India's output growth is concerned, last couple of months actually it's dipped quite a bit compared to the very healthy numbers that they were putting out in the earlier part of the year. My guess is that until the evacuation issues and the DISCOM financial issues don't get sorted out, electricity growth is going to remain muted, and this is going to have an impact on the kind of coal demand and coal production as well. Between these two sectors, coal and electricity, that's 15% of the IIP. So I think these sectors are going to show a muted trend in the near term, no matter what happens in the rest of the economy, because of very specific structural issues. We're also seeing a pickup in quite a few other infrastructural sectors, whether we look at roads or sector in terms of awards and execution, or even the dedicated freight corridor, in terms of awards, power transmission as well. There are pickups in some of these sectors, but these aren't very cement intensive. So that's another sector that until rural demand comes back or there is a major broad-based pickup across the economy, I don't think that cement demand is going to definitively show a very major improvement in the immediate term, and that again is something that would weigh on the core sector output as well as the IIP in the near term.
Okay, let's quickly get your view on the inflation number. What should we expect on Monday evening?
So as far as both the CPI and the WPI are concerned, I think we're going to see a dip. Of course, as far as the CPI is concerned, that's always welcome. Maybe not so much when we're getting into deeper negative numbers as far as the WPI is concerned. We've penciled in around 3.5% for the CPI and a negative 4.8% for the WPI. Basically, really reflecting the global commodity price decreases that we've seen in recent weeks, and that have really offset even the depreciation in the rupee that we got in August. As far as the CPI is concerned, the main factors, of course, would be that the base effect remains positive for August, but that will dissipate from September onwards, and we do expect the CPI to start recovering and moving up above 4% and remaining in a 4 to 5.5% kind of range.
So what do you expect?
Fiscal year.
Yeah. So Aditi, what's the expectation from the Reserve Bank, and when? September 29, not earlier than that, and what on September 29?
So Lata, as of today, without having seen the CPI numbers, and of course being about a week away from the Fed decision, and about a week or two away from actually getting the first advanced estimates for the Kharif crop, I do think that there is a high likelihood of a 25 basis points cut in the repo rate in the September policy. I think at this point in time, it's likely that we'll only get one rate cut in the rest of this calendar year. I'm not really penciling in two at this point in time. And of course, there's lots of data and lots of news to come between now and the policy rate itself that could really change the call for the September 29th policy.
What's the momentum on the food inflation that you're expecting on a month-on-month basis, and maybe the figure itself that you're expecting for CPI this time?
So as far as food inflation is concerned, definitely a couple of problem areas are pulses and onions. For the CPI, I think these will show month-on-month increases. Overall, though, I would expect that the momentum of food inflation on a month-on-month basis for 2015 would be lower than what we've seen in the last couple of years. So certainly not a broad-based kind of an alarming situation, but there are areas of concern. And, the monsoon has, in fact, turned even worse in the last couple of weeks in terms of the amount of precipitation that we've had. So, it's not very clear what impact this is going to have on yields. I don't think it's going to be disastrous for the Kharif yields, but I certainly don't think that the situation is going to be as rosy as what the sowing data has been telling us over the last few months, because that really benefited from that early surge in rainfall that we had in the month of June. And, I do think that we need to wait for the advanced estimates to really get a better sense on what is happening with yields. There are pockets of, areas which are fairly important for rain-fed crops that have had a very, very bad monsoon this year. So definitely the sowing data seems to be underplaying the problem as far as the overall agricultural sector is concerned.
All right, we'll leave it at that. Aditi, thank you very much for joining us. So slightly tepid IIP numbers, maybe 3.5 or less than June, that is what we are likely to get on Friday evening, today evening, and Monday evening. The inflation number also will be at around 3.4, but that will be, of course, a positive. Let's take a break.
Just before we take a break, I think Tata Motors should come up for you. They've released their August global wholesales figures, which have come in at 74,639, which is higher